Investment basics, tip number 8. Now you want to diversify your investment types between stocks, bonds, or as a venture capitalist. That just basically means that you're investing in a company that has not gone public yet, but you can still invest in it. So there are many companies out there that have really good ideas but don't have the funding, or that would be funded by a regular bank, or that they require millions of dollars. So then there's a broker that'll sell them to the normal venture capitalists who might be interested in investing in them. And there are many companies out there. You can do your own research. There are hundreds of them, but Google Ventures is like one of them. And VGoFinder, I think VFunder, and other companies that are out there. So now you have decided that you want to be a venture capitalist because you have already had some experience with regular investing. Tip number 1 is be aware of the fees that are involved. When you are a venture capitalist, there may be all these websites. They may not blatantly tell you. They might be 3 to 6%, or sometimes it could be less, but 3 to 6% fees involved that you may be paying, and then the other company or the CEO or the company may also be paying to them. So just be aware that there may be fees involved. The second thing is that you need to be aware of number of investors out there. If there are not many investors, do not invest. Look at the total time period of how long the window is open, and if it has just started opening, of course there'll be less investors. But if there is like the window is open for 2 years or 1 year, and then you're seeing like only a few 100,000 investors out there, or very less amount of investment, do not invest. So if you see like 10 million is already there, but it has just started, or 4 days before the time period is supposed to close, then you and there's already like $400 million that is already generated, that means that people are investing in the company. Also look for news and media. Sometimes TV and news media is going to report that about the company, how good the venture is. Also, another thing to look for is like, do you believe in the idea or not? Otherwise, you may be just doing like a charity. Somebody is coming up with the COVID diagnostics, which has not been there before, and you might just believe in the idea and might think, oh, this might go right. So believe in your gut feeling. Is this going to be a successful idea or not? Also, be aware, like, who are the investors? Like sometimes there are really big investors. Google and in fact invested in Uber, or like other big companies that are now big companies. But if you see a big major company investing in the idea, go ahead and invest in it. So these were my few little things that you should be aware of. Also be sure to know that there is going to be a long time before you get anything back.